This video is about my July dividend reinvestment in my dividend growth portfolio, along with a review of the whole portfolio. As you know, I have been focusing on my small positions this year, adding to some and dropping others from the portfolio. Hi, I'm Dave Van Knapp with the Dividends and Income channel. Please click the thumb up button if you like this content, subscribe to our channel, and ring the bell to get notifications about our new videos when they come out. Thank you. The small position I decided to build this month is the biopharmaceutical giant Amgen, ticker symbol AMGN. Prior to the purchase I just made, Amgen occupied just over 3% of the total value of the portfolio. This slide shows Amgen's quality snapshot. Just as a reminder, if you want to see how I create quality snapshots, please see my video called How to Assess the Quality of a Company from about a month ago. On these snapshots, colors tell the story at a glance. Green is the favorable color, and Amgen gets green scores across the board. 3 of them are the highest scores, shown by the dark green areas, and it gets those scores for its value line safety grade, its value line financial strength grade, and its wide moat rating from Morningstar. The other 2 categories get above average grades, Amgen's credit rating of A- and its dividend safety grade of 74 from Simply Safe Dividends. Overall, Amgen scores 23 out of 25 quality points, which gives it an A overall and puts it smack in the top quality tier of dividend growth companies. Now, here's Amgen's dividend snapshot. My video explaining these was just posted, so go see that if you want more detail about how these are created. Its title is How to Rank Dividend Stocks. Once again, the colors tell the story. Here we see that Amgen gets green scores in 4 out of 6 categories, its dividend safety score, and all 3 of the dividend growth categories. Note its top level score in having a 5-year dividend growth rate of 12% per year. Amgen gets 2 yellow, or okay, or average scores for its increased streak of 11 straight years and its mid-range yield of 3.1%. Altogether, the scores add up to 28 out of 35 points, which is an above-average B rating for Amgen. Finally, let's look at Amgen's valuation. This changes our perspective. We've already determined that Amgen is a fine dividend growth stock. Now we want to see if this is a good time to buy it. I use 4 valuation models and blend them together to get this important valuation information. This slide shows 2 of the models, and they're both based on Amgen's price-to-earnings ratio. The 2 colored lines are fair value reference lines. You can see that Amgen's price is below the pink reference line here, as indicated by this green arrow that I drew in, but slightly above the blue reference line here, as indicated by the red arrow that I drew. That's 2 of the 4 models, and together they suggest that Amgen is pretty close to its fair value. When I pull all 4 models together, here's what I get. I get a fair price of $262 per share for Amgen, based on its overall price to fair value ratio of 0.95. You can also tell fairness in price by a stock's yield, and here I get a fair yield for Amgen of 3.1%. Then I create a range around the fair price and the fair yield to indicate whether Amgen overall is fairly priced right now. And at the time I made this video, Amgen was priced at $249, which you can see is exactly at the borderline between fair price and bargain price. It's yielding 3.1%, which is at the borderline again. So Amgen overall is on the border between being fairly valued and being undervalued. With many companies, I would demand more than a 5% discount to purchase shares, but Amgen's quality is so high that I'm happy to accept more shares of Amgen at just a small margin of safety. So I went ahead and reinvested my dividends for July. I was able to buy 2 shares, which increases the number of shares owned from 22 to 24. They cost me $498, and they added an annual dividend to my dividend run rate of just under $16. Amgen, with this purchase, is now slightly above the threshold that I have been using to separate small positions from the rest. It's now at 3.5% of the portfolio, and I don't think I'll be focusing on it for the rest of the year. Now let's update the portfolio. Despite the volatile market this year, plus the Fed's raising of interest rates, which has some investors hesitant about investing right now, I am continuing my monthly reinvestments without interruption. I can do that because I focus on dividends, and dividends are independent from the market. This slide shows that disconnect between dividends and the market in my own portfolio. The red line is my dividend run rate this year through the 1st of July. It's up about 5% halfway into the year. The blue line shows the total return of my portfolio. My portfolio is much less volatile than the market as a whole, so it's only down about 5% in total value, even though the market itself, shown by the green line, is in a bear market. The green line shows the market itself, as measured by the S&P 500, is down over 20% halfway into the year. Here's the upshot of all this. The market and my dividend income are going in opposite directions. My income's going up, even though the market is going down. That's why I keep reinvesting my dividends every month. The market can crash, but the dividends don't. This display shows my dividend reinvestment program so far in 2022. I have added the new line here for the 2 shares of Amgen that I purchased this time, which, as I said, add $16 to my dividend run rate. And down here we can see that the 7 purchases now that I've made this year have added $110 to my dividend run rate, which equates to a year-to-date addition to the run rate of approximately 2%. The dark green numbers down here show last year's total, and I'm just about on track to match that this year. Now let's move to a review of the entire portfolio. This slide shows what I call the headline statistics at the end of the day after I bought the 2 shares of Amgen on July 11th. Here are some major points to note. First, the total value of the portfolio is about 6% higher than it was about a year ago. It's down about 5% this year from its ending 2021 value. But as we saw before, that's quite a bit less down than the market itself. The current yield of the portfolio is 3.4%, and that's up 0.2% from the same time last year. And the increase in yield is mostly because of the drop in prices, not because of dividend increases, although the dividends have been increasing. My annual dividend run rate is at an all-time high of $5,685 per year, which is up about 9.1% from the same time, approximately the same time last year. My yield on cost is 12.2%, which is also a new record high. The yield on cost moves in tandem with the dividend run rate, and just to remind you what yield on cost means, it means that I am collecting dividends at the rate of 12.2% of the amount that I originally began the portfolio with in 2008. That comes into the portfolio as cash, and the amount comes in every year. The dividend flow goes up every time a company raises its dividend or I purchase new shares, as I just did with the purchase of the 2 new Amgen shares that I've described today. And that leads me to this, my favorite chart for this portfolio. I like this because it focuses on my primary objective, which is to create a reliable, growing dividend income stream year after year after year. And we can see that that has happened. I started the portfolio in 2008. The first full year was 2009, and the dividend stream has risen every year since then. It ended in 2021 is the last full year. I've made my estimate for 2022, and by using how much I've already collected plus E-Trade's projection for the rest of the year. And that estimate now comes to about $5,600 total expected in the year. I put this dot on the bar for 2022 simply to show how much I've collected so far this year, which is around $2,800 or about halfway up that bar. Now, to finish up, here's the full portfolio. I know this is a little small to read, but if you're interested in the details of the full portfolio, you can pause the video here, take a screenshot of it, examine it to your heart's content. While you're looking at the portfolio, I'll give you these facts about it. I began it in 2008 to demonstrate dividend growth investing. Its initial value was just under $47,000. It's now worth almost $170,000, which is 263% growth. That growth has been achieved with no new money ever added since 2008. All growth has come from within the portfolio via market price increases, dividend raises, dividend reinvestments, and occasional trims and swaps. I started with 10 positions. I now have 30. The annual income goes up at about 10% per year, as you saw on my favorite chart. That would be the slope of the line connecting the top of the bars in the bar graph. And as I mentioned before, the yield on cost has reached 12.2%. I'd like to thank you guys for watching. That's the end of this video, and I'll see you next time. Goodbye, everybody.